Bloomberg Audio Studios.
Podcasts, radio, news.
Hello and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television.
What are we talking about today, Katie?
We're going to talk about OpenAI,
Sure.
all the drama. We're going to talk about chatbots and stock picking.
Yes.
And then we're going to talk about Bibles.
I'm going to bail out right now.
Sam Altman, OpenAI. You know how OpenAI is a nonprofit?
I don't.
Well,
explain it to me.
No, we don't need to because
It's not anymore?
it won't be. According to people familiar with the matter, of course, they're discussing how to restructure to become a for-profit business officially and giving Sam Altman a 7% equity stake.
It's so good.
Yeah.
I wrote about this, that if you just didn't know that it was a nonprofit and you just ignored all of that stuff, you would sort of have a better understanding of OpenAI than if you did think about its nonprofit governance structure, because, you know, they had a nonprofit board whose job was to develop AI for the benefit of humanity. And the nonprofit board decided that the CEO, Sam Altman, was apparently developing it not for the benefit of humanity. And so they fired him. And then everyone was like, never mind, there's no nonprofit board.
Well, that's the thing. I feel like a lot of people didn't know that OpenAI was a nonprofit until they fired and then rehired Sam Altman.
Yeah, there was a 5-day period where you could be like, wow, OpenAI is really a weird company and not just a hot tech startup. And then they're like, nah, we're just kidding. We're a hot tech startup. And so now they're going to be a for-profit for real.
Yeah, taking the last step. They're considering, according to people familiar with the matter, becoming a public benefit corporation tasked with turning a profit, but also helping society. But Matt, are those two things at odds? Can you help society and still make money? I don't know.
This podcast will try to find out. Look, you can be a public benefit corporation. You're trying to make a profit, but the distinction between a public benefit corporation and a regular corporation is pretty vague, right? Because you can be just a regular old for-profit corporation and also try to be good. And the constraints on you as a public benefit corporation are not that constraining. So you can be a public benefit corporation and be kind of bad. But, when if you're going from being a nonprofit company to being a for-profit company, it probably does make sense to stop along the way at being a public benefit company because it sounds better.
Yeah.
Sounds like less of a stark transition.
It still has benefit in
Yeah.
there.
It's still for the benefit of the public. You ask, somewhat sarcastically, can you do good while also making money? And I think it's really interesting that the Silicon Valley ethos is so strongly of the view that you always read VCs saying Elon Musk has done more for humanity in his for-profit companies than, any philanthropist. And, I think there's some truth to the idea that for-profit development of technology can be really good for the world and also make the people who do it really rich. And it was always at odds with that ethos that OpenAI was a nonprofit. And always very awkward because, it was founded by Silicon Valley, founded by literally Elon Musk and some VC types. Sam Altman is, he's a Y Combinator, VC guy. And, it's staffed by tech people. And all of those people, I think, to some degree in their previous lives bought into the Silicon Valley ethos of the way to improve society is to scalable, low marginal cost technology products that make a lot of money for their developers. And there's this little blip of at OpenAI, I was no, we're going to do it a different way. And then they changed their minds. So clearly a lot of people at OpenAI think that they can do good for humanity while also making a lot of money. So the mission of OpenAI being this technology in particular cannot be commercialized. This technology in particular has to be done by a nonprofit, which was apparently the theory for a while. It's always a little weird, right? Because the product they've rolled out is sort of this consumer chatbot, right? It's on a continuum with a lot of for-profit technology products. I think there's like the overlay of OpenAI believing that AI could enslave humanity or render work obsolete or like usher in a new age of abundance where money has no meaning.
Yeah.
If you really believe that your product is going to create an age where money has no meaning, then I suppose it makes sense to operate it as a nonprofit.
Yeah.
But that was somewhat marketing.
Well, you made the point before, right? Where, Altman saying publicly, like, I'm so scared of what we could be creating is a great pitch for why you should give me a lot of money. Like, what we're working on is so incredible that I am scared.
Right. It makes it seem very important. And so it helps them raise a lot of money. But eventually, those people who give them all the money want their money back.
Yeah, I don't think like all the investors pouring so much money into OpenAI, which is raising right now with a $150 billion valuation, are necessarily investing to help humanity. They're investing with the goal of making a lot of money, I would imagine.
Yeah. And by the way, like even before this like supposed change, OpenAI has this for-profit subsidiary that was already able to promise investors a big return on their money. It was like a capped profit subsidiary, so you could only make 100 times your money. But
chump change.
So what is changing is, I think, two things. One is like right now, the sort of notional corporate structure is that on top is a nonprofit, and then there's like the cap profit subsidiary under it. And you can invest in the cap profit subsidiary and get profits, but ultimately everything answers to the nonprofit board. And the nonprofit board has no fiduciary duties to investors. Their duty is to humanity, to develop AI in the best way. And, what happened is the old nonprofit board thought that Sam Altman wasn't doing that in some unspecified way. And so they fired him, and then they all got fired themselves. And so now there's a new nonprofit board that is like a little bit more profit oriented.
Yeah.
But it's still technically doesn't answer to the investors. And I think the restructuring would mean that the board is now more directly responsible to investors. And then the other thing that's happening in this change, besides like the for-profit being the top company, is Sam Altman is supposedly getting 7% of the company.
He's getting a lot of money, theoretically.
I was thinking if like Harvard University became a for-profit company tomorrow, would they give the president $10 billion? It's like a really interesting, like typically founders of hot tech companies get a lot of equity.
Yeah.
Because they retain a lot of equity, right? Like they start with 100% of the company and then they raise money by selling a portion of the company. But like they started with 100% and they end up with, 7 or 10 or 20 or 50%. Sam Altman started with 0% because it was a nonprofit. And now they're retroactively being like, well, okay, fine. It was a regular startup. So you can't have 0% equity. So we're going to give you 7%. And so because he built this company from zero to, let's say, $150 billion valuation, even though he did that without any equity stake, they're retroactively saying, well, you did that. So you're a founder. So you get 10 billion of that value you created.
I'd like
really
to know the equation that went into how did they land at 7%? Like, did they?
I'm very curious about the capital structure of this company generally, right? Because like this company is like, if you just think of the for-profit subsidiary, right? Like Microsoft owns quite a chunk of it because they've put a lot of money in it, like lower valuations than the current one. And, there's some VC investors. And then there are a lot of employees, not Sam Altman, but a lot of employees have gotten, chunky stock grants over the years. They're not called stock grants. They're called something like performance units, but they're stock grants, right? And
public benefit grants.
Yeah, they're stock
humanity
grants, but they're capped or
stake.
something. And then the rest of the company is owned by humanity, right? The rest of the company is owned by this nonprofit, right?
By you and me? No.
No. And so the nonprofit now is basically allocating money away from humanity to, say, Sam Altman. And how did they come up with that number? I don't know. I think that like it has to be a lot because first of all, he's a billionaire from his other ventures. But it has to be a lot because if you're just recasting OpenAI as a regular startup, then the founder or CEO has to own a lot of it because he has to be incentivized in the right way, right? I mean, one thing that's happened in the OpenAI story in the last year or two is that you're constantly reading about Sam Altman doing like other weird stuff. He's like getting involved in like data center deals and like power deals and like other startups that use OpenAI technology. And they all feel like conflicts of interest. And one explanation of that is, well, okay, he owns 0% of OpenAI. If he can make a little money on the side by doing some sort of nuclear power deal, then he'll do that. And so if you're an investor looking to put money into OpenAI at $150 billion valuation, one thing you want is for the CEO to be mostly working for OpenAI.
Yeah.
And you can imagine a lot of ways to try to do that. But like the standard Silicon Valley way is like he has most of his net worth in OpenAI stock. So you have to give him enough stock that most of his net worth is in OpenAI stock. And that's like,
Are you
$10
getting
billion.
like itchy with Elon Musk parallels? Because you want the founder CEO to be engaged and passionate and working on the company. Elon Musk, when it comes to Tesla, I mean, that was basically his argument that I want to focus on the thing where I have the most at stake here. Yeah. And that's why I should own more of Tesla.
Yeah, absolutely. I don't know who is asking for what here. Like you could imagine, I'm not saying this is true. I don't think this is true. But you could imagine Sam Altman being like, no, I'm good. I have $2 billion. I don't need more money from this company. I am in it for the benefit of humanity. You could imagine the board or the investor saying, no, you need to have aligned incentives. You need to own 7% of the company. Here, take $10 billion so that we know you're working for us. Like you can imagine that.
Sam Altman's like, twist my arm, all right.
Right. And like, by the way, Elon Musk will ask for the money, but he will also say, I don't want it for the money. I just want it for my, to make sure that I'm building it in the right place. So yeah, it's totally like Elon. It's a little different because Elon has a lot of very different ideas that like have a lot of conflicts, but you understand why they're different companies. Like Sam Altman, when he's like raising money for ventures that build on top of OpenAI, it's like, well, I'll just do that at OpenAI. It's a little bit more like, it looked like he was using his position at OpenAI to make money on the side because he couldn't make money at OpenAI. And now it's like, well, I can make a lot of money at OpenAI, so do that instead. But yes, the parallels to Elon are interesting, right? Because I said, the notion that Elon Musk has done a lot for humanity by running for-profit companies, it's like validates this move to being a for-profit company. On the other hand, Elon Musk is also suing OpenAI for becoming a for-profit company.
That's so true. This is a very
like in this one circumstance,
world.
He does not believe you should be benefiting humanity and also making a profit.
Feels like a while since we've talked about Elon.
I wonder, like, if the resolution to all of this is OpenAI is now a for-profit company. Microsoft will own X% of it. Sam Altman will own 7% of it. Humanity will own some single-digit percentage of it. Why
we'll
not give
reap
Elon,
the benefits.
Like, just give Elon, an equity stake for his contributions. Why not?
Chuck in a
get him on
percent or
side.
two.
Get him on side. Then you get Elon aligned. Yeah, it's good. Although he's got his own AI company, so I guess you can't do that anymore.
That's true. Was that XAI?
XAI.
Chatbots? Shall we? Shall we talk about Bridget?
Another AI transition. Bridgewise. So Bridgewise is this Israeli fintech company that is launching a chatbot that will be your broker.
Yeah.
Moving right on. So it's this fascinating story because you read about it and you're like, okay, what does this chatbot do? It like gives you stock recommendations.
Yeah.
So, I mean, I think it's like you type in, can you tell me like the top 5 stocks in like the industrial sector that I should buy today? And it's like, oh, well, looking at the research report. But like, you can imagine just being like, what stocks should I buy? And then Bridget says, you should buy these 5 stocks. And you go buy those 5 stocks. And then the next day you come back and you're like, Bridget, they went down. What's going on?
Yeah, like what information what is the prompt? Prompts matter so much with these chatbots. Like if I said, my name is Katie, I'm 31, I love horses. What would it tell me to buy versus if I said, I'm Katie, I grew up in New Jersey, that's it.
But like, those are bad prompts. The prompt that you want is what stocks will go up the most.
Well, yeah, that's true.
Because you don't care, but you're on the right track because like this thing is clearly a substitute for a broker, right? This is like you call your broker and your broker gets to know you and learns about your risk tolerances and your preferences and the themes that you're interested in. And then your broker is like, well, given your risk tolerance and your interest in the theme of horses, you should buy the horse ETF or whatever, right? But that's true because brokerage is a client service business where the product is making the client happy with the service. But you can imagine a different model where the product is like buying stocks that go up.
Yeah.
Right? I think that we all understand that when you call your broker and you say, what stock should I buy? They'll be like, what are your risk tolerances? You should be in this ETF because there's a good balance of, like they'll say something other than like, I know which stocks will go up and these are them and you should buy them. Because like, if they knew which stocks would go up
Yeah.
They would be doing something else.
Why can't I just ask ChatGPT what stocks to buy?
You can. Apparently, it'll sometimes tell you, like, can't give you stock recommendations. Because,
you can get around it.
So ChatGPT is like a general purpose chatbot, and it can like read the internet and sort of say what people will say. Like, it can make like the best guess at like what people would tell you if you asked what stocks will go up. Bridget is trained a little bit more on like financial information.
Mm-hmm.
And so it might have a better idea what stocks will go up.
Yeah.
Maybe like a less good general purpose chatbot, but a good picker of stocks. But I think the point is, like, it's so interesting reading, like, you know, there's a Bloomberg News story about it. And like, you read the story and it's like, it's been tested a lot to make sure it gives accurate recommendations. Well,
so it's been back tested?
I don't think it means it's been back tested. I think it means it's like, if it says to you, oh, JP Morgan research said that this stock is like a X price target, those quotes are accurate, right?
Yeah.
It's like accurately quoting information to you, but it's not, I don't think, back tested to pick stocks that will go up. Because if it was back tested to pick stocks that could go up and it was successful, it would not be a chatbot for a brokerage firm.
That's true.
It would be Bridge. It would be Renaissance.
Yeah.
Right?
Or, you know, it could just be the Bridget hedge fund.
Yeah.
And they could make a lot more money.
Right.
They should back test it, though. I want to back test Bridget.
Yeah.
I'll ask ChatGPT to back test
It's like
Bridget.
in beta, but like we'll certainly be testing Bridget.
Yeah. This did remind me of a thing that you wrote about already, but I was on vacation last week, so we didn't talk about it on the pod. But there is that chatbot ETF that just launched that's supposed to mimic
Yeah, we didn't talk
Warren
about that.
Buffett, Stanley Druckenmiller, David Tepper. And that's interesting. I mean, it's basically...
Yeah, by the way, I haven't seen their back tests.
I would love to
really
see their back tests as well. But basically, they have this investment committee that is built on training the chatbot around investment ideas. It basically wants them to mimic these guys. Like, it wants them to learn their personalities and then emulate it. And that's crazy. But it's kind of similar to what we're talking about with Bridget. I mean, she's just like general financial information, whereas this is what David Tepper would do.
Bridget, you know, like when you want to like change your airline flight, you like go to a chatbot and like the chatbot is like trying to replace the human customer
I always
service
minimize
agent.
that window.
Sure, me too. But like someone must do it. And like that's supposed to be mimicking the human customer service agent, right?
Yeah.
And like this, I think is sort of the same thing, right? It's like mimicking the human broker who like has the relationship with you and can like give you stock tips, but like not with like 100% reliability that it will pick stocks that go up. Just like, you know, serving the purpose of a broker. The chat bot, the like LLM ETF is a little different. Like they're trying to pick stocks that go up. Like you're not chatting with a chatbot, right? Like the person who runs that ETF is chatting with a chatbot and asking what stocks will go up and hoping that the chatbot gives them the right answer.
That's so funny. I don't know. I'm just
like the product with Bridget is the relationship with the customer, right? Like you want the customer to feel better, to feel like they're getting the information they call for. And that includes like stock recommendations. The product for the ETF is just the return stream of the ETF, right? Like the chatbot is all behind the scenes.
Yeah.
And that is putting a lot more emphasis on the ability of the chatbot to actually pick stocks.
Also, the goal of the ETF isn't to necessarily pick stocks that will go up because there's no guarantee that like
You're right.
Warren Buffett or Stanley Druckenmiller will actually correctly identify those stocks.
Okay, but two things. One, I think the ETF would much rather the chatbot pick stocks that go up that Warren Buffett would not have picked than that it accurately reflect Warren Buffett and pick stocks that go down, right? Yeah. Like, they don't actually care about Warren Buffett. Right?
They don't care about their tracking error?
The tracking error is entirely theoretical, right? Because you can't, like, find the port. I mean, you can literally look at Berkshire Hathaway, but this is like the stocks that Warren Buffett would pick if you asked him. There's no, like, visible tracking error.
Yeah.
But then the other thing is, you're right, that also their goal is not really to pick stocks that go up. Their goal is really to attract investors, right? And like, it's a good shtick, right? Yeah. It's a good pitch. Like, we'll train a chat bot to be Warren Buffett and then ask it what stocks to buy. Like, that's clever. I like that. I'd kick in money to that, whether or not the stocks go up.
I can't wait to, I mean, it already launched. We're talking about the Intelligent Livermore ETF, but it's only been a couple days. The ticker, I believe, is LIVR. I'm so excited to see the uptake of this. I want to call David Tepper and ask how he feels about it. You know, like, again, reading the description of this, the firm is going to instruct the LLMs to emulate the investors' personalities. That makes
By the way,
my skin
David
crawl.
Tepper is not in the like prospectus. Like the Bloomberg article is like
Yeah.
David Tepper is on the list, but like I don't think you can really advertise formally in writing. We're gonna like train an AI to be David Tepper. Like David Tepper's out there, like running his own fund.
That's true.
Like,
I mean,
he'd
you
be mad.
could.
He'd sue.
Well, that's another, good point against investing
By
in
the
this
way,
ETF. You
so-
could just invest with David Tepper if you meet the criteria.
Yeah, or you can just buy Berkshire Hathaway stock.
Yeah, exactly.
It's like this is a clever shtick.
Yeah.
It's not really meant to be David Tepper. By the way, the ticker is LIVR or whatever,
Yeah.
but like they've filed for several of them, and one of them is the ticker is AIWB. And again, they can't put Warren Buffett's name,
Oh my
as far
gosh.
as I know, in the prospectus. They can say AIWB.
Wink.
I love it.
Man. Let's get to the good stuff. Let's talk about Bible washing.
So I feel for the U.S. Securities and Exchange Commission.
You're a sympathizer.
I know. And they have a hard job. And like one reason they have a hard job is like they're there to protect investors from like bad ideas.
Yeah.
Like kind of, right? Like,
It's one of their
that's what they want to
one
do.
of their goals.
But that's not actually their mandate, right? Their mandate is essentially to enforce good disclosure. So like if you disclose a really bad idea, then you can do that even if it's a bad idea, even if the SEC doesn't like it.
As long as you're super upfront.
Yeah. And like there are limits on that. Many of them discovered in crypto, where you like a lot of people in crypto are like, this is a Ponzi scheme. And it's just like, come on, man. But so like one thing that happens is that the SEC is very interested in climate change, right? In environmental investing. There's a lot of focus on ESG investing, environmental, social, and governance investing. And there are a lot of people who think that firms that do that kind of investing are somehow not doing it well. There's concerns about greenwashing, where you say you are an environmental investing firm, but then you own some coal stocks, and like people get mad about that. And the SEC gets mad about it too. But the SEC can't say things like, if you say you're an ESG firm, you can't own coal stocks. Because like, who is to say what is ESG? Not the SEC.
Also, maybe that coal company has really great governance.
No, but it's true. Like these are fuzzy criteria, right?
Yeah.
And so you could truly be like the best ESG investor in the world and own a coal stock. Right?
Tesla is a great example.
Yeah, everywhere. Like, oil companies with good governance, oil companies that are improving their emissions, so they're better than, like there's all sorts of ways to be an ESG investor. And a lot of people have like genuine disagreements about what to prioritize and how to choose between like owning the best oil company to encourage oil companies to be better environmental citizens, or owning no oil companies because they're all too, there's all sorts of ways to do it. And the SEC doesn't really substantively get to pick between them. But what it does get to do is read your disclosures and make sure they're accurate. And so it has brought cases against, like, I think Boney Mellon had a ESG fund where they were like, we have these ESG screening criteria and we apply these criteria to each company before we make an investment. And they like went through their, internal records and found that sometimes they made an investment without getting a memo about the criteria. And they said, you're not actually doing your ESG investing. And so they fined them and they got in trouble. And like, that's the level of enforcement that the SEC can do. And it's, I think, frustrating for them because they probably have some substantive ideas about who's doing a good job or not. Anyway, this week, a company called Inspire Investing paid a fine to the SEC because they advertised that they were applying biblical principles to their investing, and they were like doing a rigorous screening to root out companies that had practices they didn't like. And the SEC discovered that they weren't doing as rigorous a screening as they wanted, and so they fined them some money.
$300,000 to be exact. I love this story. You called it Bible washing, and I think that's the
right. It's like
perfect phrase
greenwashing, but for biblical investing.
Yeah, I like this story, and I like all the the ESG parallels.
Yeah, it's completely the same thing, right?
Yeah.
I mean, it's this sort of broad category of like people who are investing for things other than financial returns, right? They're telling investors, we're doing your investing in some social way that you like. A big chunk of that is ESG investing, where people care about climate change or whatever. But another chunk of it is, conservative biblical principles investing, where people care about other things. And the SEC says, no matter what you're doing, you have to disclose it accurately and follow the procedures you say you're following.
Yeah. Let's just read from this excerpt from Money Stuff. So Inspire had the Inspire Impact Score, which, quote, reflects a rules-based, scientifically rigorous methodology of faith-based ESG analysis, which is interesting. There's some tension between science and religion, but in any case, this creates a level of consistency and reliability of results necessary for making well-informed, quantitatively sound, biblically responsible investment decisions. And then the SEC checked the donor lists, caught a bit of a contradiction as you lay out that certain companies that were excluded from Inspire's investment universe for donating to certain advocacy organizations or sponsoring certain events that Inspire consider to be prohibited activities. At the same time, multiple companies held within the Inspire ETF portfolios donated to organizations or sponsored events that were the same or similar. So a $300,000 fine. These ETFs are still out there. We could buy and sell them today.
Oh, yeah. And in fact, Inspire put out a press release about this, saying, "We are grateful to receive guidance from the SEC on what it considers important regarding modern faith-based investment screening. And the SEC order takes no issue with the conservative biblical values Inspire applies to screening categories." Like, they're going to keep doing this. They're just going to...
Yeah, they are.
You know, like what they advertise is like all of our investments have no involvement in, you know, gay rights organizations or abortion rights. And the SEC found that some of them did. And so they're going to like clean up their act and be more accurate about screening out companies that don't meet their criteria. But the SEC, as they say, took no issue with their criteria, right? If you say you're going to exclude companies that contribute to gay rights charities, then you just have to do that. And then the SEC will bless it.
I almost said, hell yeah, they're going to keep doing it. Do you get it? So one of these ETFs, BIBL is the ticker. It's this Inspire 100 ETF. This ETF still exists. I took a look at the performance. It's doing okay. It's up 16% year to date on a total return basis. SPY, for comparison purposes, is up 21%. Its top holdings are Caterpillar, Intuitive Surgical, Progressive, etc. Its top industry groups are REITs, software, and healthcare. All, you know, holy stuff.
My point here is that neither the SEC nor I can make any comment on whether this is holy stuff or not.
So I do think the idea of principle-based investing is really interesting. And that's what this is.
Yeah,
that's what ESG is. But why people do it is really interesting to me. Like, if you're investing along your values because you don't want to invest in stuff that goes against your values, sure. Or are you investing because you think that your values will produce better returns? That's a really interesting school of thought. Like, if you believe that a company is environmentally conscious and sound and will weather climate change better than other companies, that could be a reason that you invest. Do you invest in this fund because you believe that these biblically responsible companies are going to do better than the ones that aren't?
I haven't read enough of the marketing literature to know, but I think in ESG, I think asset managers benefit a lot by kind of blurring that and sort of hinting that you're getting both, right? Like, you're getting to live your values and you're also getting a higher return. And I think like there's not really a contradiction between them, because like you could easily believe that like you have these values, your values are right. Over time, other people will come around to your values. And when other people come around to your values, that will increase the stock prices of companies that share those values, right? Like, that's a fairly consistent thing to believe. And you could believe that about, you know, environmental or biblical things. I don't think you have to analyze it rigorously to say, like, the companies that I believe in are also the companies that'll go up, because you could believe that, you know, without either ESG or biblical principles.
Yeah.
Right? You could be like, I really like Taco Bell, so I think Taco Bell stock will go up. So
we're talking about BIBL. They have some amazing other tickers as well. WWJD. What would John do? They also have the ticker GLRY.
Walking away from the microphone.
Larry, I assume. So silly. But yeah, no, the ticker game is strong.
And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on Open Interest between 9 to 11 a.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question and we might answer it on air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff podcast is produced by Anna Mazarakis and Moses Andam.
Our theme music was composed by Blake Maples.
Brendan Francis Noonan is our executive producer.
And Sage Bauman is Bloomberg's head of podcasts.
Thanks for listening to the Money Stuff podcast. We'll be back next week with more stuff.